The crypto world is like a ticking time bomb. At any moment, something explosive happens that can reshape the entire market overnight. Imagine the massive shockwave if Satoshi Nakamoto, the mysterious creator of Bitcoin, was finally unmasked. The ripple effect on the market could be unprecedented. And what if China, after its infamous crackdown, is starting to experience a serious case of crypto FOMO? In today's video, we'll dive into the key events shaping the market right now, including the latest news buzz around altcoins. These updates could determine your next big move. Don't miss out on what could make or break your portfolio. 1. Satoshi Nakamoto unmasked. For over a decade, the identity of Bitcoin's creator, Satoshi Nakamoto, has been one of the greatest mysteries of the modern financial world. Recently, there's been renewed speculation about the identity of Bitcoin's creator, Satoshi Nakamoto, with reports and theories surfacing from both investigative sources and crypto forums. One notable lead comes from Craig Wright, who has claimed in court to be Nakamoto. However, this claim has been met with skepticism within the crypto community, with no definitive proof offered to support it. Wright's legal battles have kept this controversy alive, but the crypto community remains divided, with many demanding more definitive proof. The idea of unmasking Satoshi Nakamoto is a big deal because it has the potential to affect Bitcoin's future. If the creator's identity is ever verified, it could lead to a shift in Bitcoin's perception, either positively or negatively. But why is this a big deal? If Nakamoto's identity were to be confirmed, it might disrupt the mythos surrounding Bitcoin, which thrives on decentralization and anonymity. Just imagine the psychological impact on the market. Speculative events like this tend to drive market volatility, and depending on the person unmasked, it could affect trust in the Bitcoin ecosystem. Bitcoin could see a surge in value if the figure is credible, or face skepticism if linked to anything controversial. Interestingly, Nakamoto supposedly holds around 1 million Bitcoins, a figure that could destabilize the market if those coins were ever moved. In short, while the rumors around Satoshi's identity are nothing new, they continue to cast a shadow of uncertainty over the Bitcoin market. 2. China's FOMO on crypto. Now, what's going on here with China? While China famously cracked down on crypto mining and trading, recent reports indicate that the country may be experiencing a kind of crypto FOMO. Yes, they're feeling left out of the blockchain revolution. Despite the crackdown and restrictions, China's central bank is exploring blockchain technology for its digital yuan, and Chinese investors have been increasingly engaging with cryptocurrencies through offshore exchanges. There's also been a renewed interest in crypto projects tied to Web3 and NFTs, as the country seems to be subtly embracing parts of the ecosystem despite its official stance. So what's at stake here? China, despite its stringent regulations, has never fully detached itself from crypto. If China decides to lift its crypto ban or create more favorable regulations, the global market could see a massive influx of capital from Chinese investors. This would likely have a positive effect on major cryptocurrencies like Bitcoin and Ethereum, which could lead to a huge surge in demand for top cryptocurrencies like Bitcoin and Ethereum. China's digital yuan could also eventually challenge cryptocurrencies, especially within its borders. But the coexistence of both digital assets could also pave the way for wider adoption and growth, particularly for DeFi projects. While the ban hasn't been officially lifted, China's quiet return to the crypto scene is something every investor should be watching closely. 3. Ethereum leads the charge on Layer 2 solutions. Ethereum's ongoing development has been a hot topic in the crypto world, especially with its migration to a proof-of-stake (POS) system after the Ethereum 2.0 upgrade. It has had its share of ups and downs, but its transition to a proof-of-stake system has made it more efficient, scalable, and eco-friendly. But what has developers buzzing is its dominance in Layer 2 solutions like Optimism and Arbitrum. These technologies are making Ethereum faster and cheaper to use, solving some of the network's biggest pain points, such as high gas fees. Ethereum users have long complained about expensive transaction fees. These solutions handle transactions off-chain and then settle them on the main Ethereum chain, making transactions cheaper and faster. Now, why is this big news? Well, without Layer 2, Ethereum struggles to handle large volumes of transactions. Layer 2, tech like ZK rollups bundles transactions together and processes them off-chain, enabling the network to support more users without sacrificing speed or security. More developers are flocking to Ethereum to build decentralized applications, dApps, since the costs of deploying on Ethereum are significantly reduced, making it easier and cheaper. This will only increase the network's long-term value. Layer 2 solutions are crucial in making Ethereum scalable enough to handle mainstream adoption, which many believe will cement its status as the world computer. This trend is expected to be a game changer for Ethereum's adoption, especially as competition heats up with other smart contract platforms like Solana and Cardano. 4. Bitcoin ETFs, a game changer or overhyped? Bitcoin ETFs have been a long-awaited development in the crypto space, and now they're starting to gain traction. The approval of Bitcoin exchange-traded funds, ETFs, is one of the most significant financial milestones in the crypto world. ETFs allow traditional investors to gain exposure to Bitcoin without needing to directly buy or hold the asset. This is critical because it lowers the barrier to entry for institutional investors and large-scale investment funds. Countries like Canada have already approved Bitcoin ETFs, and the US could be next. These exchange-traded funds are a way for traditional investors to gain exposure to Bitcoin without actually holding the asset. You might be asking, what does this mean for me? Bitcoin ETFs are essentially bringing crypto into the traditional financial world. Institutional investors like pension funds and retirement portfolios can now invest in Bitcoin through regulated channels. This is a major legitimization of the cryptocurrency market, as investors who were once skeptical now have a regulated option. ETFs could help reduce Bitcoin's notorious price volatility by creating more consistent buying patterns. Large investors like hedge funds often create stability in traditional markets, and the same could happen in crypto. Although ETFs provide a way for mainstream investors to enter the market, some purists argue that they dilute the decentralized nature of crypto. Additionally, the regulation of ETFs adds another layer of oversight that some investors may find stifling. In essence, Bitcoin ETFs are a sign that crypto is becoming more integrated into the broader financial system, potentially increasing the legitimacy and appeal of Bitcoin to larger audiences. Think of ETFs as a doorway to crypto for traditional investors who've been standing outside. They don't want to buy the actual coins, but they can still invest through an ETF without worrying about the complexities of wallets or private keys. Either way, Bitcoin ETFs represent a major milestone in legitimizing crypto assets for the broader financial world. 5. Stablecoins under regulatory scrutiny. Stablecoins like Tether, USDT, and USD Coin, USDC, have become critical in crypto trading due to their ability to provide liquidity and stability. However, because stablecoins are pegged to fiat currencies like the US dollar, these digital assets have caught the attention of regulators worldwide who are concerned about transparency and financial stability. One of the primary concerns is whether stablecoins are truly backed won by reserves of the currencies they claim to represent. If they aren't, this could lead to a loss of trust in the system, causing mass sell-offs and market instability. Governments worldwide are exploring the idea of creating their digital currencies, CBDCs, which could potentially challenge or replace stablecoins. CBDCs would have the backing of central banks, making them more trustworthy in the eyes of regulators. Regulatory bodies like the US Treasury and the European Central Bank have already expressed concerns about stablecoins undermining national monetary policies. A crackdown on stablecoins could mean stricter rules on how they operate, which could affect their liquidity in the market. Stablecoins are vital to the crypto ecosystem because they allow investors to avoid the volatility of traditional cryptocurrencies. However, regulatory oversight is critical to ensure that stablecoins are as secure as they claim to be. Imagine stablecoins as the bridge between traditional finance and the crypto world. If that bridge is found to be weak due to insufficient reserves, it could collapse, leaving traders stranded. Regulators want to make sure that the bridge is strong enough to handle the growing weight of investors. If regulators enforce stricter measures, stablecoins could lose their utility or see increased volatility as investors pull out. As the debate around stablecoins rages on, the outcome will be crucial for the future of crypto markets. 6. Altcoin news. While Bitcoin and Ethereum dominate the headlines, altcoins are rapidly gaining traction and offer unique features that cater to various niches in the crypto space. Projects like Cardano, Solana, and Polkadot are driving innovation, particularly in areas like decentralized finance, DeFi, non-fungible tokens, NFTs, and smart contracts. Solana, SOL, is gaining traction again after its recent network upgrades resolved prior downtime issues. With improved scalability, Solana is becoming the go-to platform for many DeFi projects, and its NFT ecosystem is expanding rapidly. Despite its rocky past, Solana's current growth trajectory makes it one of the top altcoins to watch. Cardano, ADA, is another one to keep an eye on. Its Hydra upgrade is expected to significantly boost transaction throughput, making it a serious contender in the Layer 1 blockchain wars. Cardano's commitment to sustainability and security gives it a unique edge in the competitive altcoin landscape. Many investors are turning their attention to altcoins as potential high-reward opportunities. For example, DeFi tokens have surged in popularity, becoming a more attractive option for average investors, providing users with new ways to lend, borrow, and earn interest without intermediaries. DeFi might not be as shiny and new as it was a few years ago, but it's still a critical sector of the crypto world, offering real-world applications and investment opportunities, and continuing to attract both seasoned and novice investors looking for new ways to grow their portfolios. However, with high rewards come high risks, and investors should carefully assess each altcoin's fundamentals and market position. Crypto never stops evolving, and neither should you as an investor. From the mystery of Satoshi's identity to China's crypto FOMO and the rise of Layer 2 solutions on Ethereum, the space is brimming with potential and risk. Whether you're a seasoned pro or just dipping your toes in the water, staying informed is your best weapon in surviving this fast-moving world. So, what's your next move? Let's keep the conversation going by commenting in the section below. Dive deeper into your research, keep your eyes on the trends, and remember, in crypto, the only constant is change. Don't forget to like and subscribe for more updates. Thanks for watching.